Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's consider the gold market again. So we have prepared a report as usual on the gold market. Well, it is a bit not usual, so we have considered some specific moments, and if you take a look at them separately, you do not quite understand well, how it could be involved in a whole picture. What does it mean? So how to combine, for example, problems in the liquidity in the United States that we saw in the end of the September and end of the third quarter, which actually was previously happened in the United States in 2019, this last event. How we could combine this with rising United States yields, outstanding demand from the foreign investors for treasury bonds suddenly, which is actually nobody would like to buy. Currently it's approximately 80% of the recent auctions on the 30-year bonds, on the 10-year bonds were bought by foreign investors. Rising of the United States dollar and multiple political issues that we have this week. If you will take it all together, the picture is becoming very clear. It's becoming easy to explain why all this stuff is happening. So maybe it sometimes will be a bit boring to read, especially about the overnight funding rate, SOFR, United States. There are some issues, economical specific terms, but well, I just have to place it then because it's a really important part of the overall situation. And well, currently the technical and general analysis and technical tools that we have obviously have the secondary role, because things that is now is going on and it's yet to start absolutely totally will ignore any technical issues. Since overall background, fundamental background in the gold is skewed and stand in favor of the bullish dynamic, I think that we would make a mistake if we will trying to buy gold at some levels below the market. And here we have for a short term, in the beginning of the next week, we have a few issues. First of all, recall what we said on Friday. Market has formed bullish reversal candle. Weekly trend remains bullish. And with this reversal, market has confirmed the 26 support area turning up. On Friday morning, we have agreed to keep an eye on the resistance that stands right here. And that will be the key, as we said, to the next direction. Because normal bearish market doesn't suggest a breakout above the 618 level and especially support area, it's a resistance area right now. If you suggest some deeper A, B, C, D action, so it will be inconsistent with the bearish scenario. In particular, this event we've got. So you could see that this breakout has happened to the upside, especially on the background of the rising inflation, rising United States yields and dollar. It just tells you the obvious thing, that the only factor that could trigger this type of action is geopolitics. Nothing else could support gold in the periods of the strong rally on the dollar and the yields, especially when you have by statistics rising in inflation. In a normal situation, it will definitely crush the gold and it's keep dropping, but not this time. Correspondingly, from the practical point of view, what we could do. Personally, I would consider reverse head and shoulders pattern on top. Something of this kind, so you could draw the neckline differently. So for instance, you could include this as a shoulder, or this will be the shoulder. It's not really big differences. Anyway, the one thing that we could say is while market will start approaching back to the 2640, 2635 area, it will be interesting chances to consider taking a long position on the gold market, because this will be optimal point for considering long entry. That's what we intend to do on the next week. That's what about the technical picture. Now just a few words about some big picture. If you take a look at the gold market and the United States Treasury, you easily could understand the big political process that we're standing in a world in the last century. So for first, this is gold market. First, if you take a look, for example, on the bonds in the United States that has the history right from the beginning of the 20th century, you easily could consider all history of the financial markets, starting from the crushing of was the boom of the economy until the 1930s, where a big depression starts, and then the big bad times for the United States has started. First it was World War II, then the crash of the golden standard, losing war in Vietnam in the end of the 60s, then inflationary process and oil crisis in 1980s, where the changes of the tendency starts. This downward action and chipping of the money cost has been triggered by the big event right there. This is the historical agreement with the China and transposing of the production in the China territory, which provides the fulfillment or filling of the money supply in the United States with the goods that were made in China. So dollar has got real value and was backed by real goods that have been provided in China. That put the end of the inflationary spiral in the 1980s. Agreement with the Saudi Arabia on the petrodollar also plays a role. Then starting destruction of the USSR and Eastern Europe, and involving in a dollar and Western world. First it was in Eastern Europe countries, then it was Soviet Union, where in 1995 United States have got the access to all resources in former USSR, and this has lasted for 35 years. Here, this action, you could see that the system has been broken. The continuation of this trend suddenly stopped with the starting Ukraine war. China suddenly has appeared on the other side, and some other markets and countries, and BRICS in particular, and you immediately could see how money has become more expensive for the Western world. So this is really great representing charts that something is going wrong, and this is the first moment of the reversal. Here at this point it is not all clear yet what will happen, and we explain a particular stage of this process in our gold report. The same you could see on the gold market, with the only difference that epidemic has triggered a rally in the gold slightly earlier than the problems with the liquidity starts. It has started somewhere in the 19th year. Explosive rally has happened in the 1920, and that has become the next stage that corresponds to the stage on the 10-year bonds. It is more ridiculous that both markets are moving together. It explains that it's really breaking of the political order in the world. So all that we have said previously is correct, and currently we have discussed the moment where all this politics stands, and we have made conclusions for the gold market in particular. So this is very interesting. In the shorter term, I just talked about this already, so let's stay focused on this possible pattern and see how it will turn.